Where does it turn awkward? Where does it turn like, oh shit?
Yeah, I think it's more like after I go through their existing loan and I'm like, oh shit, well, I don't really have much room to offer them benefit.
Why? Explain that part. So you go through existing term, what makes you say, oh shit, I can't really?
I think there've been a lot of calls where people bought the home last year or they refinanced during COVID, so they already have a stupid low interest rate, you know, and then there's just almost no, in fact, I might not even be able to match the rate they already have.
Yeah.
Right.
Okay. That's the issue right there, right? Is you are justifying what's beneficial to them. You're making the decision, not them.
Right.
I'm going to run across a couple scenarios with you, right? Let's say you get an inbound call from someone who has no debt and they got 1.99 30-year fix, right? Or 1% 15-year fix, something stupid. Something like, oh man, I can't beat that. So how do you pivot? Instead of thinking like, I can't help you, because that changes your demeanor. It's going to come out in your confidence, right? Especially if you're 100% real, you're going to tell them like, oh man, I can't help you, but you might be able to help them. You see? So there are certain pivot questions that turn into funnel questions. Pivot questions are saying like, hey, this person is like most of society, living check to check, right? Up to their neck in debt, right? No money, low FICO. This is a pivot question, meaning that we got to go a different way. And so here's a technique. Number one is you say, okay, great. Let me ask you a few questions regarding your property's current condition. On a scale of 1 through 10, 10 being, you know, your ideal state. Like the house is perfect. It's the most valuable home on your block. On a scale of 1 through 10, how would you rate? Like, what do you think that would say?
That's 7.
Got it. Okay. So Derek, in order to make it a 10, what can you do to the home?
I guess I could get, you know, double glazed windows and some siding on the walls, maybe redo my yard.
Okay, cool. And then Derek, can I ask you, are you intending to be here throughout your retirement or sell it in the near future?
I'll probably be here forever.
Probably be here forever. Okay, perfect. So you want to make sure that this house is a 10, right? What's your current term right now?
I'm in a 30-year. I'm about a year into my 30-year. I just bought the house last year.
Okay. And are you sending just the minimum payment due, or are you paying above and beyond what's due?
You mean for my credit cards or for
for mortgage?
Oh, I'm just paying what I'm billed.
What you're built, right? Okay. And then now that you bring up credit cards, how much do you owe credit card debt?
I try to pay off most of it every month, but I carry over about $2,000 balance.
Okay, cool. So we have what's called a net that I need to report here just for our underwriters. Net is basically how much of your net income every month you're able to net to your savings, like for rainy day, right?
Yeah.
Do you know what your net is?
I probably stash away about $500 or $600 a month in my bank account.
That's awesome. Okay, cool. Plus you're also paying debts off in full. So if you're adding $600 per month to your savings, how much do you have in checking and savings on average per month?
I don't know, maybe 10 grand.
Okay. And when's the last time you looked at your credit report?
Probably when I bought the house about a year ago.
What was your FICO? Do you remember?
740, something like that.
Okay, cool. So when you buy your home a year ago, you said you're on a 30 or 15?
30-year.
30-year. Okay, cool. So here's the thing is that, number one, you got a good amount of net cash flow, right? In this campaign that I had an idea of, it's not necessarily meant for you because it's meant for, you know, one, if you're in any financial burden, I may be able to open up some options for you to create cash flow savings. If I can create cash flow savings, which you already got $600 in net per month, what would you do with the extra money?
I'd probably just put it toward my principal.
Okay, put it towards your principal and pay it off sooner, right?
Yeah, I think so.
Yeah, okay, cool. That makes sense. Well, if you shorten your term, it's definitely going to increase your payments. So that might be your in for this campaign. Let me ask you a few questions to make sure you can qualify for it first. Have you got any bids for all the improvements that you needed to make your house a perfect 10?
No, I mean, I wasn't actually thinking about taking any action on it until you just brought it up.
Yeah, for sure. I'm trying to find benefit for you. And since you plan to retire here, then what more benefit than retiring in the home that you envision is perfect, right? So just an idea, what do you think it would cost to do all those improvements to make your house perfect?
40 grand.
Okay, here's my idea is that if I could show you how to improve your existing term, pay your house off sooner, plus get the improvements to make your house a perfect 10, I may be able to fit you inside this campaign.
Well, don't cash outs usually come at a higher interest rate? I'm already in a great interest rate.
It's not a cash out program. This is actually a program designed specifically to help improve your existing term. right? So you might be able to get in cash out, but if you're able to turn your house a perfect 10 and you already got enough cash flow, plus you could reduce the term, it would actually improve your current state. Because right now, your only option right now is to liquidate your savings of 10 grand to fix the $40,000 and make your house a perfect 10, or rack up debt. Not to mention it's gonna hinder your net. And that's something that we need to protect. If anything, I want to show you how to improve it, increase it. That makes sense?
Yeah,
so
but if I'm taking out more money to fix up the home, isn't that just adding to my debt anyway?
It's your call. If you want to make your house a perfect 10, you're going to retire here. It's your home. Do you want to retire in a 7 or you want to retire in a 10?
I guess if you put it that way, I want to retire in a 10.
Got it. Let me show you how to do that. So, right? And then this is how you go in. Now I've created need from you who didn't have need.
Right. Yeah.
You see what I'm saying?
Yeah, I get it.
Yeah, it's just all about the questioning, man. So moving forward, instead of feeling like, oh, I can't help them, just learn how to pivot, right? Because you already talked to them, 30 minutes, 20 minutes, 15 minutes. Might as well, wring out every single drop that you can.
Yeah.
But you have to be sold on it. I could tell you're smart and you're logical. So you're assessing it as if like it was your home, but it's not. You're assessing it like it was your budget, but it's not. You're assessing it like it was you making this, but it's not.
I think I put myself in the borrower's shoes a little too much, and I forget that
Yeah, that's empathy. So that's a strong suit that you got, Derek. Don't lose that. Don't change up anything. Just understand how to navigate the remainder of the conversation when you reach that roadblock.
Connected to SalesRemastered.